Hi guys, good evening. I will start in about 2 minutes time, so just bear with me. Okay, I'll be with you guys shortly. Hi guys, good evening. Welcome to I Love Lessons, free summer classes. My name is Miss Maynard, and I will be delighted to be your teacher for the next 4 sessions. Some of you may be wondering, of course, about this is probably your first time doing principles of accounts, and you might be wondering um, if this subject is going to be a difficult one. But what I can say is don't worry. Um, we would learn this subject step by step. And at the end of the 4 sessions, I hope you will be able to understand a little about accounting. All right, that is just for the 4 sessions, of course. I hope you'll be able to learn a little about accounting. All right, so let's get started. I've seen quite a lot of students enrolled for this free summer classes, and it tells me that a lot of you are interested in principles of accounts. So that is wonderful. Okay. Um, what you should know, for those of you who have doubts, what you should know is that accounting is a subject that is, easy for us in the sense that it's all around us. Accounting is all around us. Every day, people and businesses, of course, will receive money, they would spend money, they would save money, they would pay bills, and all of these kinds of things that I've just mentioned. Of course, whenever money is received or spent or recorded in whether it is your little notebook or you have recorded information pertaining to monies you may have gotten from your parents, accounting is actually involved there. You are actually doing accounting. So for those of you who are in school, if it is, let's just say you've got money from your parents to buy lunch, or you have got money to pay for transport to get to and from school, or let's just say your parents has a small shop or mini mart, or your parents owns a big business. Accounting on the whole will help you, whoever it is that is, recording the accounting for that business, whether it is spending, receiving, and all of the other things that is necessary for you to make note of. It will help you to track the monies that you would be having access to. All right. So not just accountants can benefit from understanding accounts, okay? Not just accounting. Because as I said to you, just a minute. Hi, good afternoon. To those of you who just came in, good afternoon, Ariel and Sonia. Good afternoon. Okay, so as I've said to you all, it isn't just when you hear of accounts, you think of, okay, accounting is just for accountants. No. When you do your own little, your own little recording of your monies in books, or you have spent money based on what your parents may have given you. And for those of you who have jobs, you do your own little accounting as to how much money you have in your account at the bank, or, how much money you would have spent on certain things for your household. All of that is accounting. All of that is accounting. All right. So we are going to get started with just that little introduction there. We are going to get started as to just the basics. All right. Now, what you must know is that accounting isn't just a subject you can just read and understand about. Some of the things that are very important, and one of them is learning about concepts. And when I say concepts, you have to learn certain accounting terms. So when you are now going into an accounts book and you see those terms, you can identify it with what is being said. All right? So let's get started, guys. Let's just get started. All right. So you all are seeing a lot of accounting terms here. And I don't want you all to feel confused by it. All right. Because, it is just a way of you really trying to, familiarize yourself with some of these terms. Okay. So let's just get started. So the first thing we have here, what is bookkeeping? Well, I have here bookkeeping, and let me just move this a little more, just a minute. Yeah, bookkeeping is writing down the money a business receives and spends in special books. So if I were to ask you, what is bookkeeping? It is keeping the books, simply keeping the books. All right. So bookkeeping is writing down the money a business receives and spends in special books. All right. It is simply keeping accurate or correct records of business money activities. And when we talk about the activities of a business, we are talking about buying. Whenever a business has to buy goods, let's just say a business, a mini mart, they need to have goods in their business because they're selling. All right. So when they buy goods for their mini mart, or they sell some of the goods that they have bought, or if they receive money from customers, or if they have to pay bills in order for the mini mart to keep operating, if they have to pay like light bill, all of those are considered activities, business money activities. All right. So, well, when we are through with this, I can take your questions after. Okay, guys? So I'm just running through this quickly. Just a minute. Yes, yes, Ariel. Oh, hi, Anaya. No, you don't have to write down. You don't have to write down this. This would be sent to you after, okay? Yes, you don't have to write it down. No, no, sweetheart, you don't have no anyone. For the students who have asked if you have to write down this, no, do not write down any of these notes. It would be sent to you after. Okay, good. And what I will do after, at the end of going through these concepts or accounting terms, you can probably just ask me anything that you're confused about. Okay. So the other one, accounting. What is accounting? Well, I have here, and I'll just take off this for a while so I can see my screen properly. Hold 1 second. Okay, so accounting is the process of recording, organizing, and reporting a business's financial information so that people can make good decisions. I think it might sound like Greek to some of you all. So let us try and break it down a little. Accounting is the process or the system of recording. And when I speak about recording, I'm talking about writing down financial transactions. And just now I'll tell you what is a transaction. If you look down, you would see what it is. Okay, so accounting is the process of recording, that is writing down monetary. Anything that involves money is a financial transaction. So if you're writing down financial transactions, then of course that is recorded. Okay, accounting is also about organizing. So just as how you have to organize, you know, your, if you are at school, you organize your book bag, you put, you know, the subjects, you wouldn't walk around with all of the heavy books. You might just organize all of the things, all of the books, sorry, that you may need for a particular subject, or, you know, anything that you have to put in the correct order, it is called organizing. So in accounting, that's one of the things that should be taken into consideration closely. Organizing your work in a proper way. If people are to understand, if people are to understand what you are doing, like if you have a small mini mart or so, if you have a book, you might not put all of your purchases of goods or sales of items that you have in your mini mart, you wouldn't put them all together for every day of the month. You would probably put a heading for each day. All right, this is the first of the month, the second of the month, the third of the month, and you would organize those days of purchases or sales in special books. So that's a form of organizing. All right, and the other one, yeah, and the other one is Accounting is about reporting. So when we are talking about reporting, we are basically telling people how well your business is doing. And there's a name given to those people, stakeholders, which is what we would look at shortly. All right. So reporting is about telling people or showing people how well your business is doing. And why? Why are you doing all of this? So that you can make good decisions. If you have all of your recording in a cluttered way and all of your organizing of your transactions in a cluttered way, everything is going to be cluttered. So you would not be able to make good decisions. So once you are able to understand that accounting is about recording, writing down financial information in an organized way, then you would be able to report it in an organized way so that you can make good decisions. Okay? And then we have another definition here. What is a business? Now, I'm giving these accounting terms because it will help you to understand what I'm teaching into the next 4 sessions or so. And it's pretty easy to understand. What is a transaction? A transaction is any activity. A transaction is any activity involving the exchange or use of money between a business and another person or another business. All right? So once it involves money or the exchange of goods or the exchange of money, it is a transaction. So a transaction is any activity, whether it is buying goods, selling goods, receiving money, paying money, it is any activity involving the exchange or the use of money. It can happen between a business and another person, or it can happen between a business and another business. Okay? Example, a customer buys goods from a shop. A business buys, that is a transaction. You bought goods from the shop, so you have received goods and you have to pay for the goods. So that's a transaction. It involves money. A business buys goods from a supplier. Well, the business receives goods. And of course, because they bought the goods, they have to pay the supplier. And in time to come, you would understand who are suppliers. I'm going to come to it shortly. That is a transaction. It involves money. If the owner invests money in the business, and I didn't put the accounting term for capital, but capital is when an owner invests money into his or her business. It is known as capital. So if it is the owner invests money in his or her business, that's a transaction. It involves money. If it is you have to pay, if it is the business has to pay T&Tech for their electricity bill or water bill or water for their water bill, or they have to pay the telephone company for telephone charges, it involves money. So it's also a transaction. All right? So anything that involves the exchange or the use of money is a transaction once it involves money. So you see, we have covered 1, 2, 3, 4. We're going into profit. What is profit? Profit is the money a business has left after paying all their expenses. So again, you're seeing the word expenses there and you're kind of like wondering what are expenses. Understand the concept first, right? Understand the concept first, and we are going to come to expenses a little. The word, of course, second to last. Okay? So profit is the money a business has left after paying all their expenses. So before I go into, let me just see a message here. Just hold 1 second. Okay. That's the most I can zoom it, sweetheart. But when you are going through the recordings, you will get it better. Okay, hon? This is the best I can do here. All right? I'm sorry. Anise. No, no, Anise, I'm sorry, sweetheart. No, you're not writing anything, honey. You're not. Neela, when you mean exchange. Yes, it can involve foreign money as well. Because when you are trading, you don't trade in the country in which you live. You can trade outside in a foreign country. So once it involves the exchange of money, it is a transaction. Okay, Neela? Yeah. Okay, so let us first let us first okay. Let us first just go through this. Just a minute. I'm just okay. Bitcoin. I've heard so much about this Bitcoin, Sonia. I've heard so much about it. I don't particularly like it, but that's another thing for another day. Let us just go through um, these other definitions here, accounting terms, and then we will take your questions, okay? So let us see profit. As I told you all, think about it. If it is your parents, or less your, I would use parents because I think most of you here are students. Your parents have given you $100 for, let's just say, the week. I know it's small money, but all right. You get $100 for the week. But you have budgeted that $100 whereby you want to spend money for lunch, you want to buy maybe some stationery, you want to possibly pay for transportation to go to school, you want to buy a little gift for your friend because it's your friend's birthday, whatever you want to do with that $100, you are telling yourself you want to have at least $20 for savings at the end of the week. All right. So that $20 that you were able to save basically is seen as a form of income for you. It's a form of income, all right? Because you received $100, but that is the money. It's an income for you. You received the $100, but you've only spent like $80. So now just look at this here. A bakery sells bread for $1,000 in 1 week. So the bakery is selling bread and they are able to receive or earn $1,000 in a week. But in order for the bakery to operate, they must spend some money too. Okay? You don't just wave your wand and say, okay, I've made $1,000. No, it isn't just as simple. You have to spend money in order for you to receive money or to get an income. So in order for the bakery to operate, they must first, let me just see if I can, just now I'm trying to see if I can get this. All right, okay. So in order for the bakery to make money, they must spend money, okay? So they must buy the flour, the sugar, the yeast, the butter, the baking powder, because they have a bakery. They're probably making just not just bread, but pastries as well. So they need to buy all of those things to make the pastries. And of course, they might have workers, so they have to pay wages, meaning the salary for the workers. Workers don't go out there and work for free. They must be paid for their labor. And of course, the bakery will have to pay for electricity if they're using electric oven, stove. They have to pay for electricity, and they may have other expenses. They might have to buy, like maybe wrap baking paper and stuff like that. There are other expenses. So after they have spent all the money on all of their expenses, all right, and I've itemized some of the expenses here, they have $300 left. That $300 that is left from the 1,000 that they received in a week is known as their profit. Okay? They have made a profit because they did not spend all the money that they received. They did not spend the entire $1,000. They have spent less. So the aim is to understand that if you are running a business, your aim is to cut back on your expenses. You're not going to give your customers bogus bread that doesn't taste good. But at the same time, you're going to look for cheap ingredients. You're going to buy things possibly, on a big scale from Price Smart or so that you can get it at a cheaper cost. So in that way, you are able to cut back on cost. And once you cut back on cost or expenses, then your profit would look better for the business. All right? What is a loss? And I'll come to you guys just now. I saw someone just, I'll come to you guys. Keep all your questions. I'll take it right after. Yes, it is called, yes, spending your money wisely. Nicholas, spend money to make money. Yes, very good, Nicholas. Okay. All right. So what is a loss? A loss is when a business spends more money than they receive. Okay? So let's use this example. A small shop earns $800 from sales. Okay? So they sell, let's just say, you have a shop. Just a minute. Okay, all right. I'm just trying to access the message here to see if anybody's asking me, came in late and asked any pertinent question. Justin. Justin, not gambling. Gambling, that's a risk of making money. Okay? It's a risk. Okay? So let's look at a loss. A loss is when a business spends more money than it receives. Okay? So let's just say you earn $800 in your shop. Okay? You have a small shop, you get $800 a week. But you're not spending wisely. You're not spending wisely at all. You spent $1,000 on goods, rent, wages for the employees, and other expenses. You're not keeping check of your expenses. All you know is that you got $800 from your shop and you just went ahead spending without checking on your expenses. Then, of course, if let's just say you spent $1,000 on goods, then what happens is that you're going to make a loss because you have spent more money than you actually received. You received 800, but you've spent 1,000. So you're going to make a loss of $200, okay? Because you've spent more than you have received. Let's counter. Please note all class recordings can be found. Okay, all right. Okay, so you all got a message from I Love Lessons, and you're being told that all of your class recordings can be found, of course, within 24 hours after the live class, okay? Yeah. So make note of that. Great. So look, we come to the word here, expense. We've been hearing about expense, expense, expense. So we know now what is an expense. Let us see what is an expense. This is money spent by a business to help operate and obtain money. So an expense here, we're going to go back here. Okay. This business here made a profit of $1,000. They have spent $700 on flour, sugar, wages, expenses, and other expenses. Okay, all of these things being mentioned here are considered expenses. All right, so this is money spent by the business to help it operate. You need the flour, sugar, wages, electricity, and all of that. You need all of that in order for you to operate your bakery. All right. But when you spend all those money, you are able now to obtain money in the long run, because what you can do is now sell that bread, sell the pastries at of course, an increased price with a markup, so that you can make a profit. Okay. All right. Just a minute, guys. I just seeing one thing here. Just hold 1 second. I'll just mute you for a second, guys. Just mute you for a second. One second, guys. I just confirming one thing here, okay? Okay, guys. Yeah, so I will take all the questions right after stakeholders, okay? All right. So as I said to you, make note as to what is an expense. It's important for you to understand concept. All of, let's just say you have a bakery and you've spent money on flour, sugar, the wages for the employees, the electricity, because you have an electric oven, whatever you spend money on, it is an expense. So this is the money spent by a business to help it operate. And of course, in the long run, you are able to make money. So paying the rent for your shop is an expense. Why? Because if you don't pay the rent, you'd be thrown out. The landlord or landlady will throw you out. So rent is an expense. Paying workers their salaries or wages, it is an expense. If you don't pay your workers, they're not going to return to work because they need to get money for their labor. All right? Paying the electricity bill. If you have an electric oven or electric stove and you do not pay your electricity bill, then you are going to be in a predicament because, of course, you need your oven in order for you to bake your pastries and your bread. Okay? So that's an expense as well. And then we're going to come to the last definition here, stakeholder. Who is a stakeholder? These are people or groups who have an interest in a business and want to know how well the business is doing. All right? So if you own a business, you would want to know how well your business is doing. All right? You're a stakeholder. Once you are interested in how well a business is doing, maybe because you have invested money in the business or for any other reason, why would you be interested in a business? There are many reasons for being interested in a business. But once you have an interest in a business, then of course and you want to know how well the business is doing, then you are a stakeholder. Okay, so I'm going to just take one or two quick questions because we need to move on. We have limited time. We have limited time. Oh, wow. Okay, guys. So let me just take a quick question here. One or two quick questions. Nicholas. Okay, Nicholas, it's vague when you say not in 30 days. I'm not sure I understood what your question is. Neela, you please go loss when you find, okay, all right. So a loss, Neela, a loss is, I'll use it in simple terms for you. If it is, Neela, you've been receiving $100 from your parents every week, all right? And you were able to, let's just say, save $20 from the week before, okay? So altogether, for a particular week, you have received $120. But because you are not keeping check, you're not, keeping check of your accounts or your monetary monetary transactions, because you're not keeping check. If you went and you purchased, let's just say you have saved, let's just say you've saved $120, but the items that you want to purchase is $130. You have made a loss of $10 because you might have to borrow that $10 from your parents again. So basically a loss, I will put it in a more specific way here now. A loss is if it is you made a certain amount of money, like the bakery, they have made $1,000 for the week. Okay, they've made $1,000, but they have purchased goods and paid wages to employees in the amount of $1,200. It is more than they have actually earned or received. They have received $1,000, but all of their expenses came up to $1,200. So they have made a loss of $200. Is that better, Neela? Neela? Beautiful. Nice. Landlords. Oh, 30 days from, yes, Nicholas. Every month, a landlord is expected to receive their rent from their tenants. Tenants, of course, are people who rent, maybe, their home, they rent an apartment, they may be renting for business purposes. If, let's just say, you do not pay at the end of the 30 days for the month, if you have not paid your rent, and then the landlord will probably give you notice telling you that you have not paid. And if you don't pay if you do not pay by the following month, then they are in order to throw you out. Okay, so it's usually 30 days every 30 days, you are supposed to pay a rent. So every first of the following month, you're supposed to pay a rent. Okay? Hope that answers your question. Justin, let me see your question. What about discounts for expenses? Well, it's a revenue, a discount. If it is you are a business and you are giving a discount, it's a loss because you are losing money. However, if you are receiving, if it is you are receiving a discount as a business, then it is an income for you. All right? So you have to specify which one of the discounts. All right? And in time to come, you will understand there are discounts allowed and discounts received. Discounts allowed is what the business gives to their customers. Discount received is what suppliers give to the business. But I don't want to confuse you with that at this point in time, okay? After the class, how will you be able to access the notes? I will share that information with you again, okay? I'll share that with you again, Amiko. Okay, let's see what's next. Right. All right, so just a minute. Zane, what if I gamble and you use $100 and gain 1,000? Then you made a profit. Okay, Zane? Yes, you would have made a profit. Yeah, because you have invested $100 and you've made $900 from gambling. So you made a profit. Not that I'm telling you to gamble, by the way. All right, because you could have made a loss too. You could have gone gambling with $100, okay, and you could have lost all of your money, okay, and not get any money at all. All right. Okay. Is it different from a shareholder? Okay, so shareholders and owners are basically the same. Anuj, when you think about shareholders and owners, shareholders are people who are in companies, who have invested in a company. So you're a shareholder, okay? An owner is of course a person who have invested capital as well in his business. So if it is you have invested capital into your business, if you're a sole trader, and we'll do that in time to come, you have a business, you are the only person investing in your business, it is called capital. Shareholders, on the other hand, they invest small shares. They invest shares into a company. Okay? So they are, yes, investing in a business, but it's considered, you're considered a shareholder because you are just putting in small amounts of monies. Each shareholder, puts in a small amount of money into the company so that the company can now collect a lump sum, all right, which is known as capital for the company. All right. So all of these investors or shareholders who have put small amounts of money into the company, they are known as shareholders. And they're also owners of the business. They are also known as owners of the business. All right. Okay, so let's just, all right. I'm sorry, I just want to go quickly. Jaden, taxes from the government. The government will definitely be interested in if, yes, the government will definitely be interested if government, yes, I'm not seeing, let me just scroll down here a little more. The government will definitely be interested if government for profit and loss to tax. Okay, so Jaden, the government is not going to tax you on your losses. If you are running a business and you've made a loss, the government is not going to tax you on your loss. That is like taking the business and sinking them more into debt. So you must make a profit in order for the government to tax you. Okay? Okay, so my autocorrect ruined my, okay, all right. Kaylin, it's similar to, just a minute, Kaylin, just a minute. Yes, similar. All right. Okay, so I'm seeing a lot of questions. Miss, I put money in operations. Are you a stakeholder of the church? Well, if it is, if you are, because a church is a non-profit making organization, they don't really make profit. All right. So if you put money in offering in the church, yes, you would want to know what the church is doing with your money. So yes, indirectly, you would be considered a stakeholder. Excellent question. Okay. Yes. Emmanuel. How will discount be recorded in the financial statements? Okay, we are going to come to that, but discounts are usually first recorded in your cash book, okay? And then when you get to, of course, this is Greek for some of the other students, when you come to your trading and profit and loss account, which is a statement, you apply it there. So in time to come, you will learn about it, all right? Meyer, brokers. I wouldn't say so, Maya. No. Um, no. But I will double check for you, okay? Emmanuel, how will this? Okay, I got that question already. Okay, guys, so we need to continue, okay? Right. Okay. All right. So let's continue, guys, because we still have a lot more work to do. Okay, so let's move on. I hope you all understood all that we have done here. I'm closing off. All right, and now we are moving on. So we're going to look at this. So we're going to look at shareholders and their use of accounting information. All right. All right, so let's look at stakeholders, and we know who are stakeholders, and I told you all who are stakeholders. They are people who are interested in the well-being of a business. All right, so owners are people who own a business. You all can see that I have given there, I've shown you this person, of course, who owns this lady. She owns her business, as you can see. Of course, she has a business, maybe a pastry. She owns a bakery. So owners need accounting information to know if the business is making a profit or loss. So it is important for you to understand, and I'll take all questions after. I'm sorry, guys. As soon as I'm through with this, I will take your questions, okay? I'm sorry. I just need to be able to cover this topic for you guys first, okay? So owners, as I said, are people who own a business. Now, why? Why would they need accounting information? Of course, if you have a bakery, I've given you an example here. But before I go into the example, owners need accounting information to know if the business is making a profit or a loss, and whether it is doing well. That is the main reason for owners wanting to have accounting information. So this helps them make decisions about the business. All right. For example, Sarah owns a bakery. She checks the accounting records to see if the bakery is making a profit. So this will help her to know how well her business is doing. So Sarah here, she has a bakery. She checks all of the records that she would have in her special books, all right, she checks it. So she knows that she has made, let's just say, all of her sales for the month are using $1,000 again. She has made $1,000 profit. Okay. So she is feeling good. All right. But let's just say she realizes that she has spent more than $1,000 for the month. So that tells Sarah here that she has made a loss. But how much? She has spent $1,500 for the month. So she received $1,000 from selling her pastries and her bread, but she has spent, her expenses is $1,500. So Sarah has made a loss of $500. So what is Sarah going to do? She can't close down her business. What Sarah has to do, Sarah now have to decide on what should she do. What Sarah can do is cut back on her expenses. She needs to cut back on her expenses. If she's not getting, more money, let's just say she's not getting more money in the business, there is no other form of income coming in, Sarah definitely has to cut back on her expenses. She has to reduce her expenses. Okay, so owners need accounting information so that it will help them to make good decisions. If it is she doesn't cut back on her expenses, she is going to be in a predicament. Okay, her business is going to keep going down. All right, so owners need accounting information so that they can see whether they've made a profit or a loss, and then based on what information they have acquired, they can make proper decision. Hence the reason we have given the definitions before. Okay, moving on. Managers. Managers are people who are responsible for running the business and making sure it operates smoothly on a daily basis. All right? So we are talking about managers here. Now, if you are owner of a business, you may not have time to run the business. Let's just say you have a mini mart, okay? But you have another job. Okay, you're probably working elsewhere, but you want to make sure that your mini mart is being operated properly, then you can hire a manager who would run the mini mart for you. So managers are people who are responsible for running the business. For running the business and making sure it operates smoothly on a daily basis, so that, of course, the owner can receive profits from the business. So why managers need accounting information? To help them make good decisions about running the business. If it is you're running the business for the owner is expecting that you would inform them as to what is the best direction the business should be, going in. If it is you are the manager of the business and you recognize, like, let's just say the mini mart, there are certain items that are not being sold on a regular basis, you as the manager need to inform the owner that certain items are not being sold. And of course, the owner would definitely love that information because it means that his items will not be staying on the shelf. Remember, you're operating a business to make a profit. Okay? So it helps the owner. It helps both the manager and the owner to make good decisions about running the business. For instance, David is the manager of a clothing store. He checks the accounting records and see that sales have gone down. So the manager must be able to observe these things. If they are selling clothing that are not very trendy, but the owner continues to buy very old-fashioned type of clothing, then the manager's job is to let the owner know that these clothing are not being sold. All right. The sales are going down. It's not being sold. And of course, the owner will have to find ways to increase the sales. But how? How are they going to increase their sales? They can probably try to, find out from their customers what type of trendy clothing would they like. If they are able to target their customers and know that their customers are more younger people as opposed to older people, then of course, as a manager, you will encourage the owner to buy more trendy young people clothing as opposed to traditional old-fashioned clothing for the more senior citizens. Okay, so I've shown you a picture here. This is what a manager is supposed to do. A manager is supposed to be able to assess everything that is taking place in the business, and he can possibly talk with the other managers to bring this to the owner's attention. Okay, so that's for managers. And now employees. Employees are people who work for a business and are paid wages or salaries for the work they do. Nobody works for free unless it's a family business and you want to support it and say, okay, I don't particularly need the money. I'm just helping out mommy or so. Okay. But once you are an employee in a business, you are expecting to get a salary or you're supposed to get wages. They both mean the same, salary and wages. Wages are basically for workers who are getting paid weekly, fortnightly or so. Salaries are for people who are getting monies monthly. All right. So if you are an employee, you need to be able to, you need to know that at the end of the week, the fortnight or the month, you are going to receive money known as wages or salaries. So why do employees need accounting information? Now, all of these employees here, especially the ones at the back here, all of these people here are employees. So they are expecting to get wages or salaries at the end of the month or the week or the fortnight or so. They need accounting information to know if the business is doing well and can continue to pay their wages or salaries. Now, if employees don't know how well a business is doing, then it's a risk working for that business, because at the end of the week, you do not want to be told, okay, we do not have any money. Thank you very much for your input into helping with doing XYZ, but we do not have any money to pay you. Oh, no, that ain't going to work. All right. So as an employee, you want your money because you have bills to pay. You need to buy food. You need to pay your rent. You may need to get clothing. So you need your money. Example, Anna works in a supermarket. We're using this here as an example. Anna works in a supermarket. She knows the business is making a profit. So, of course, she would feel confident that she will continue to receive her wages. But let's just say you are not getting accounting information. Everything looking a bit sketchy. Then you are going to be very skeptical about staying in that business as an employee. Okay? So employees, of course, will need accounting information because, hold 1 second, employees, I just wanted to get a little water. Employees need accounting information so that they can try to determine as to whether they stay in the business or they leave, because they do not want to give their services, or they don't want to work hard in a business that doesn't pay them at the end of the week or the end of the fortnight, which is every 2 weeks or every month. All right, they need to know that they are able to get their money. So they need to get accounting information so they will know whether the business is making a profit. All right. Of course, if the business is making a loss, you ain't gonna stay there. Okay, number 4, customers. Customers are people or businesses that buy goods or services from a business. Okay, so customers are businesses. A business can either sell tangible goods, all right? So those are goods that you can see, touch, or move, or you could be a customer for services. You can go to, let's just say, a hairdresser to have, or a barber to have your hair cut. It's an intangible service. You cannot see it, you cannot touch it, you cannot move it. So customers are people or businesses that buy goods or services. And when I say buy goods, I'm talking about tangible goods, goods that you can see, touch, and move, or services being performed, whether you are getting lessons. That's a service. You cannot see it, you cannot touch it, you cannot move it. It's intangible. Okay, so customers are people or businesses that buy goods or services from a business. Okay, why do they need accounting information? Customers need accounting information to know if the business is doing well. Again, everybody wants to know if the business is doing well. And of course, will continue to provide the goods or services they need. All right? It is really heartbreaking if it is you're very pleased with a business, or let's just say, you love brand name sneakers, Nike, Adidas, and whatnot. It would be sad to know that you love Nike sneakers, and then before you know it, Nike closes down, or they no longer carry the Nike sneakers. They looking for imitation. You want your Nike sneakers. So as customers, you want to know how well a business is doing so that they can now keep stocking the items, or buying the items that you, the customer, is satisfied and pleased with. All right? So an example, Sarah buys bread from a bakery. She wants the bakery to stay in business so she can continue buying bread there. Now, if it is, you see all of these cookies and biscuits and crackers and all of this is what, of course, we're looking at a supermarket here, but of course, the bakery behind is selling cookies and biscuits and crackers and stuff like that. If you are a customer and you love the cookies, that this grocery has, and then all of a sudden, they stop making the cookies. All right, they're not doing very well. They stop making the cookies. You would be disappointed as a customer. They stop making the cookies. Why? Because they're trying to cut costs. They're not making enough profit. So they're trying to cut back on expenses. So because they're not making a profit, they have decided to do away with cookies. They are just going to do biscuit and crackers. You would be disappointed as a customer. So customers need accounting information to know how well the business is doing, and if it is, the business would be able to provide the things that they like, or the things that they want or they need. All right? So that is it in relation to customers. All right, and we are moving on. Suppliers. Suppliers are people or businesses that provide goods or services to another business. Okay? You know, when we spoke about goods here, we talk about, you know, tangible items, things that we can see, touch, and move. Services are, on the other hand, the opposite. You cannot see it, you cannot touch it, you cannot remove it. All right? So when you talk about services, you're thinking about, you know, a haircut. If it is you're going to the barber for a haircut, if you have to go to the seamstress, she provides a service also. That is the kind of services I'm talking about. You cannot see it, you cannot touch it, you cannot move it. All right? So why do suppliers need accounting information? Why? Well, of course, they need to know if it is the business is, of course, doing well. All right. Now, I just need to move this a little more because it's blocking my slide here. Hold 1 second. It's not moving. Just give me 1 second again. Okay. Well, let's see. Oh, okay. So we are talking about suppliers. I will tell you in my, because I'm getting this blocking here. Just a minute. Decline. Okay. So suppliers are people or businesses that provide goods or services to another business. So this gentleman here, he is a supplier. He's giving goods. Let's just say this lady here, she has her own business. He's supplying a box of crackers maybe, or a box of whatever item he has in this box here. He could be selling boxes of snacks. All right, he's a supplier. He's supplying snacks. I am looking at the boxes, so I'm thinking if he's handing it to the young lady here, it has to be light. Okay, so the supplier, which is this gentleman here, he is supplying goods, not services. He's supplying goods to this lady who owns her own business. All right, so he is a supplier. Why would he need accounting information? Why do suppliers need accounting information? They need to know that when they have, and because I'm not seeing this slide very clearly, I will tell you in my own words. All right? They need to know that the business can pay for the goods that they have bought. So this supplier needs to know that when he passes on this box of snacks to this lady who owns her own business, he needs to know that she can pay him, let's just say at the end of the month, let's just say he has given her these box of snacks on credit. And when I say credit, I'm talking about she can pay sometime in the future. When you sell goods on credit, it means that you do not have to pay immediately. A cash transaction is when you pay immediately. So let's just say she had just taken the box of snacks and she had given him, let's just say $200 immediately. That would have been a cash transaction because she has paid immediately. But because she's not paying, she's receiving the box of snacks on credit. All right, she's not paying it immediately. She's going to pay him. She made an agreement with him that she will pay for the box of snacks at the end of the month. So this supplier now, of course, he has to look at her financial information to make sure that at the end of the month, she can pay for that box of snack that she has taken on credit. All right. So It's important for suppliers to get accounting information based on goods that they have, of course, given to a business on credit. All right? Hope that is clear. So I've given an example here. I don't know why I'm not seeing this clearly. The supplier wants to know if the bakery is doing well and can pay for the flour. So I will doubt that it's flour in this box here. So the supplier wants to know if the bakery is doing well so that they can pay, or the bakery can pay for the box of snack that they have taken on credit. Guys, I'm just trying to find a way to remove this writing here. Hold 1 second, please. All right. So that is it in relation to suppliers. Suppliers are not going to give their goods, they're not going to supply goods to another business if they know that the other business cannot pay. How would they know? By looking at the accounting records, by looking at the books of the business, where the business will show that they are making a profit. If you are not making a profit and you're making a loss, you will not get the goods from the supplier. Okay, so that is it in relation to suppliers. And we're nearly finished. We're nearly finished. Banks. Of course, banks are financial institutions that lend money to businesses to help them operate their business. So we all know that if it is you have a business, you can either get your money from your savings, but let's just say your savings is not enough, then you can go to the bank and borrow a loan. But if you are borrowing a loan from the bank, you must know how you're going to pay back that loan. Okay, so you need to show the bank your financial information. You need to show the bank that you are making enough profit from your business so that, of course, you can repay the loan in time to come. All right, so banks need accounting information to decide if a business is able to repay the money that it has borrowed. All right. I will use this. Let's just say this is the same Sarah who wants to buy a new oven because she has a bakery. All right. The bank, of course, would look at the accounting information, Sarah's accounting information, to make sure that she, of course, can repay the loan. All right. If they have seen that you are not doing very good financially in your business, they will not lend you that loan. Okay, so you see how important accounting information is. And as I said to you at the beginning, accounting isn't just about a subject. Every day we are involved in some form of accounting, whether it is you buying snacks, whether it is you're lending money to a friend, if a friend needs to get some money from you, all of that is considered accounting. Okay, you buying something, you selling something, you are borrowing money, all of that. So accounting, don't just view accounting as, oh, it's a subject. Apply it to your everyday life. Once you are able to apply your income, which is money that you receive, and your expenditures, which are expenses, to your everyday life, and you see and you are able to record these in special books, you are actually doing accounting. Okay, moving on. The government. Of course, the government is the authority that makes laws, collect taxes, and ensure the businesses follow the rules. And I'm seeing some messages, so I will answer your answer just now, okay? Guys, I just want to finish off this. So we know that the government is the authority that make laws. Now, if you look at the picture, let's just say that this is the UNC government. This is the UNC government. I'm not saying it is. I'm just giving you an example. They sit here, they make laws, okay, pertaining to businesses. They would now come up with ideas as to how they are going to collect taxes. And they would now also make sure that businesses follow whatever laws or rules that the government has come up with. So the government have a very important role. They make laws, they collect taxes for businesses, and they have a law where if it is you are making a profit in a business, you must pay 25% of your profit. Now, remember, that would be a law that the government would have come up with. Whatever profit you make in the business, you pay 25%. So that tax that the government collects from your profit from your business, it is used for infrastructure. It is used for building roads. It is used for medical services. It is used for hospitals. It is used for transportation. It is used for a lot of things. The government used that money for a lot of things. So the government needs to ensure that if you are a business and you're making a profit, that you must pay your taxes. And if it is you are running a business that is detrimental to people in a particular area, of course, the government will now have to take into consideration the health of people in a particular community. So they want to make sure that you follow all the rules that they have set for running a business. Okay? So why do they need accounting information? We have spoken about it, to calculate the taxes a business must pay to make sure that the business is operating according to the law. For instance, a supermarket earns money from selling goods. We know that. The government will check the supermarket's accounting records to find out how much tax the supermarket should pay. And that will be based on their profit. If a supermarket has made a loss, by looking at the accounting records of the business, then of course the government will know, look, this business did not make a profit, so we are not going to penalize this business further. We are not going to ask this business that is struggling financially to pay taxes. Okay, so once you've made a loss, they would not penalize you for taxes. Okay, I think we just have about 3 more and that's it. Investors. Investors are people or businesses that put money into a business because they hope to earn profit or return on their investment. Now, I can give you all of these names here. Let me just look at some names. I'm looking at some names here. Janky, let me just scroll down a little. Aidan, Aliyah, Abian, Adam, Aduk, Africa, Aidan again, yes. Akila, Akisha, all of them. Let's just say all of them. All of them are investors. You know what they're doing here? What they will do, what all these names, I've called out some names, all of them are investors here. What they are doing is they are pooling their money. Each of them will give a small amount of money, as you see in my cursor. They will give a small amount of money to this owner who has his business. He collects all of their monies, but when he collects their monies, he just doesn't give them back the money that he has collected from them. He has to give them back their money with a return. Okay? They are doing this in order for them to earn profit. So let's just say Aidan here gives this owner $100. And let's just say Aidan lent this owner here $100. He puts the $100 here. He's collecting monies from other people. But Aidan expects that when he lends this owner $100, Aidan expects to get 10% of $100, which is $10. So Aidan now expects that when this owner has to repay him, he will get back $110. All right? So that is the reason for investors lending money, because they want to earn a profit or receive return on their investment. Okay? So why would they, just 1 second, guys, 1 second again. Yep, chip just now. Oops. Okay, so why would investors need accounting information? They want to find out how well the business is doing before giving their money. You are not going to put money in a business and you are not sure how much interest you're going to get back or how much money you're going to make as profit. That is being stupid. If you are taking your hard-earned money, you must be able to get back a return on your investment. And your investment, in this case here, Aidan's investment is $100. So Aidan is expecting that if he gets a 10% of $100, Aidan expecting at a particular time he's going to get back $110. And so would all the other investors. Okay? So, of course, by looking, investors need accounting information to find out if the business is doing well before deciding whether to invest in or to continue investing. Now, if the business isn't doing well, you are not going to continue investing in the business. So you have to be very particular about the accounting information given so that you can make a profit on your investment. Okay? So James, example, James wants to invest money in a company. He checks the company's accounts to see if the company is making profit and is likely to be successful. All right? Yes, Michael, I'll come to you shortly, sweetheart. We just have 2 more and that's it. And then I'll take all your questions, sweetheart. Okay? Bear with me. I just need to cover this topic, okay? Trade unions. If you are a person that look at the news, you would realize that we see a lot of protesting taking place on the news. So trade unions it's also a stakeholder, and all of these are stakeholders. Trade unions are organizations that represent employees and help to protect their rights, okay? Their wages, their benefits, and their working conditions. Trade unions are organizations that look after their members. Members are persons who are, or employees who work for a business, but they have joined the trade union, all right? And once they have joined the trade union, they are known as members, all right? So trade unions are there to make sure that workers have rights, okay? They are entitled to sick leave. They're entitled to annual leave. They are entitled to vacation leave, all of those. Workers are entitled to fair pay. So trade unions will make sure that workers are entitled to fair pay. The minimum wage, I think, is $20 or $21. But if, let's just say a business want to pay you $7 an hour, trade unions can fight to make sure that you get your $21 an hour. trade unions also would look into exploitation. If it is you know, like some of the Venezuelans that are here, they're being exploited, which is really very sad because they work long hours and they get very little pay. So they're being exploited, and that is not something that we want to do if we are running a business. All right. All of these things are things that trade unions will address. All right. So trade unions need accounting information. They will address it because if they know that a business can do better in terms of paying their employees more money or making sure that their employees are comfortable in the working environment or any other thing that employees would need. And these are people, of course, who are working for the business. Once the trade union looks at the accounting records of the business and they can see that the business can pay their employees more money or they can provide better working conditions for their employees, then of course they would request it. And how would they request it? By looking at the accounting information to know if the business is doing well. All right. And we just have one more, the general public, and then I'll take all your questions, okay? The general public is a group of people in the community who are affected by the activities of a business. So, of course, the general public, of course, is people who would be in your community. And when you look at all of these people, they all belong to one community. All right, depending on if you live in Lange Park, you're living in the Lange Park community. Okay, so why the general public need accounting information? Of course, because they want to know how a business affects the community. They want to know that the business can provide jobs for people in the community. How would they know? By looking at the accounting information of a business to see if they're making profit. If you're making profit, then you can hire more people in the community and, of course, give them a salary. Of course, the business might want to, the community will make sure that as well the business is paying taxes. If you don't pay taxes, then our roads that are full of potholes are not going to be fixed. Remember, you pay taxes so that you can have proper infrastructure, proper roads to be built. You would want to make sure that when you go to the hospital, you're able to get proper health care and medicine and stuff like that. That is what the government takes your taxes to do. So they want to make sure that a business is paying taxes and operating, of course, responsibly, sorry. So for instance, a community will want to make sure that if it is you have a business and you are disposing of garbage, that you will do so responsibly. You would not throw your garbage out in the street where, you know, you will have rodents running up and down and, of course, creating problems for people in the sense that these people can get sick if it is you are throwing garbage out in the street and you have rodents running over the garbage and they're going into people's homes, and of course people will get sick. So the general public will need to know that the business is doing well so that they can provide jobs, so that they can pay their taxes and they can operate responsibly. Now, guys, I can take all your questions now, all your questions, because we have some, I don't know what time, just a minute. Okay, we have limited time. So let me take your questions quickly. Okay, Kaylon, is a stakeholder like a conglomerate? A conglomerate? No, I think I answered that just now to you, okay? Kaylon, do they do they make laws through votes? Yes, the government must of course, sit together. They come up with laws, which goes to the higher house, and of course, you're going to have a vote on it. So yes, yes. All right. Um, to see how much someone makes to you says that yes, it's important, Neela, for someone to give a job letter to indicate to the bank, or let's just say you need to show financial information as well of your business if you have a business, so that you can get a loan from the bank. Other question, Nicholas? I Nicholas, oh, just a minute. Is POA hard? If you keep practicing, no, it would not be hard. Okay? Once you go through your notes on a daily basis and you keep practicing or going through your revision and understanding concepts is very important. Okay? Can stakeholders be classified as yes, 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 definitely. So we have internal stakeholders, and we know that internal stakeholders are stakeholders who are working in the business. All right? We are talking about internal, and I forgot to mention that stakeholders could be working in the business, like the owners, the managers, the employees, and all of the others are considered external stakeholders. So from the list that I have given you there, internal stakeholders are owners, employees, and managers. They work inside the business. External stakeholders are people who are working outside of the business. All right? So I'm sorry I didn't mention that. Now I have I have just about, can we speed through the multiple choice? Yes, we are going to speed through it. Yes, we'll do that now. Okay? So let's just do that quickly. Okay, so let's speed through it. So we'll do the first three, answer the first three immediately. And I'll just give you the answers. So let's speed through. All right. So because we have limited time, I'm going to just take just about 5 minutes. I'll give you all 5 minutes, okay? So a minute or half a minute. So I'll give the answer immediately. Oh, beautiful. Zach, number 1B. Number two, you're incorrect. Sorry, number 2 is correct. Number 3 is correct. Sorry, Zach. I don't know why I saw that. So you're correct. Okay. Yes, you are correct. Lashi, Disha. Okay, just a minute. Just a minute. All right, so here's what I'm going to do, guys. You can correct it yourself. Number 1, your answer is B as in bat. Number 2, your answer is C as in cat. Number 3, your answer is B as in bat. So if you have those, you can correct it yourself. And when we talk about the qualities and things like that pertaining to accounting, we'll realize that honesty is one of the qualities, one of the things that are very, very important when you are doing accounting. So we'll touch on that. Okay, so be honest with your answer. Let's go to the other slide. Put your answer for number 4, 5, 6, because we have 15 questions. Put your answer and then I'll give you the answer. I'm sorry, I'm unable to look at it individually. But once you have your answer, I will give you the feedback, the correct feedback. So number four, your answer is B as in bat, correct, Micah? Okay, number four, your answer is B as in bat. Number five, your answer is A as in apple. A as in apple. Why? Because if you buy bread from the bakery, you need to pay your money. So number five, A as in apple. Number six, your answer is C as in cat. Kaylin, yes, your answer for number six is correct. C as in cat. Correct. Okay. Number seven, your answer is B as in, oh, I'm sorry. I did not give you all a chance. So I gave away number seven. Number seven, put your answers. It's supposed to be very simple. Okay. So number seven, your answer is B as in bat. B as in bat. Let me see what Kaylin has here. Yes, Kaylin, B as in bat. Number eight, your answer. Number eight, Alim. Yes, you're correct, Alim. C as in cat. Number eight, C as in cat. Number nine, I'm just choosing another one. Number nine, Justin or Nilo. Okay. Number nine, your answer is C as in cat. C as in cat. Let's go to number, we just have five more and we're through. Number 10, put your answers for number 10, 11, and 12. So you can go through this after, okay, guys? Okay, so you will get your feedback to today's session on the WhatsApp channels. Okay, guys? I was just told that. So Kaylin, number 10, C as in cat, correct? C as in cat. Number 11, your answer is D as in dog, correct, Kaylin? Let me see who else have answers here. Nicholas, you didn't put your number, sweetheart. I don't know. Sonia, I can trade with, oh, okay. Nicholas, you didn't put the number, sweetheart. I'm sorry. So number 11 is D as in dog. D as in dog. Number 12. Nicholas, your answer is correct. B as in bat. And I'm sorry if I'm not calling on the others. Let me see, Justin. Justin, we reached number 12. Yes, Nicholas, yay. Okay, all right. Okay, so number 12, the answer is B as in bat. And we're moving on to just the last three quickly. You will get this on the WhatsApp channels, okay? 13, 14, 15. Answer your questions there for me. 13, 14, 15. Thirteen, 13 for Micah, Decato. Yeah, it's number 13, B as in bat, you're correct. Beautiful. Number 13, anybody else? Oh, I'm not seeing you, Sonia. I need to get a different person. Alim, number 13, yes. Alim, B as in bat. Okay, number 14. Number 14. Number 14. A. Oh, very good, Nicholas. You have both 14 and 15 correct. I need to see somebody else's answer. Neela, 14 and 15 correct as well. Who else? Sonia, 14 and 15. I need to see answers. 14 and 15 correct, Sonia. Kaylon, 14 and 15 correct. Very good. Faith, 14 and 15. I'm not seeing. Oh, Faith, 14 and 15. You're correct, Faith. Who else? Let me see. Aletier, 14 and 15. Correct. Oh, very good. Excellent. Pima, 14 and 15. Right. Yes, Hima, you are correct as well. Okay, so I'm seeing quite a you all have gotten quite a few correct. So I'll just repeat the answers for those who felt that I was going a little too fast. I'm sorry. Number 1, B as in bat. Number 2, C as in cat. Number 3, B as in bat. Number 4, B as in bat. Number 5, A as in apple. Number 6, C as in cat. Number 7, B as in bat. Number 8, C as in cat. Number 9, C as in cat. Number 10, C as in cat. Number 11, D as in dog. Number 12, B as in bat. Number 13, B as in bat. Number 14, A as in apple. And number 15, A as in apple. I hope you all got all correct. I'm just kidding. But if you did, very well done. Once you have gotten more than 6 correct, I'm very comfortable with that. All right. So that's it, guys. It's lovely having you guys. I'm sorry that it's a little, I couldn't answer all your questions, but of course, I hope to be able to make our class a little shorter next day so that I can incorporate some questions, okay? So have a wonderful evening. Until next week, Monday, please God, okay? Take care, guys. Bye.